Hey guys, welcome back on the channel. In this video, I'm going to talk about ranges, how to read charts, set ranges in concentrated liquidity pools. I'm gonna lay out the map in this one and tell you all about it. We're gonna look at small details like, for example, the candle chart, time frames here that you can set. Also how to understand when we are changing from an uptrend to a downtrend and also vice versa from a downtrend to an uptrend, among many other things. For that, I'm going to use as an example the Aster USDT token pair. So this is a liquidity pool on the Binance Smart Chain. Aster is a token that came up as a response of the Binance ecosystem to Hyperliquid. And since it is backed by Binance, I think this is a really good option for farming in the long term. Although you can see here the chart, it's very recent. They only started this liquidity pool on September the 19th. And I believe that's also when the token launched. So we're gonna take this chart as an example. So essentially, for you to set ranges and start yield farming in concentrated liquidity pools, there's three main aspects that you need to understand in any chart: resistance points, support areas, and consolidation. So let me zoom in a little bit more here just to show you what each of those are. Resistance points are essentially when you see these peaks in the chart where the price hits a specific number and then it immediately drops because people are taking profits. So this is a resistance point. Support areas, on the other hand, are when the price drops to a certain level and once it touches that spot, it immediately bounces back up, or at least it stays in range. It doesn't fall from that level. So that's a support area. And then we have consolidation, which is essentially support areas that keep on going for a long period of time. So we can see here that we had that same example here. For example, for this time frame, you see the price here was chopping sideways in between something like 1.3 up to 1.73. So for this price range, the price was chopping sideways. As a yield farmer, this is your sweet spot. This is smooth sailing. That's what you want to see in your charts, because as long as you have set a proper range, you don't have to do anything. It's just a matter of claiming and compounding if you decide to do so, or claiming and take profits. It's up to you. But this is optimal. As a yield farmer, this is what you want to see. When looking at the chart, you will find resistance points and support areas all over the place, and I think that over time Aster will also start to consolidate at around a specific price. Pretty much we have, like, from launch up to all-time high 100% appreciation, and then from all-time high to current price we have also some volatility, minus 20%, but some days ago the price was even lower at 36%, 37%. So that's the volatility, right? In order to make money yield farming, especially in the long run, you want to have a wide enough range that catches all of this volatility. So take a look here at the bottom of the chart. You see these green and red spikes. This is the volume. Volume heavy days, this is where you will make the most amount of money, even with wide ranges, especially if the prices are moving up. So let me zoom in just to show you better. So you see here in the beginning, there was a lot of volatility from September the 19th, the launch, up until the September the 21st. This was actually the most volatile period of the token so far. And from here on, you see that there's much lower volume. So although there's still some volatility here, it's not nearly as much as it was in the first few days. So if you have been yield farming a token like this or Aster itself, you will see that you will earn a lot less fees right now than you did before. But that's just my personal choice. I prefer to yield farm in the long term, and if you are a complete beginner watching this, I think that would be also the best case for you. Start providing liquidity with wide ranges, and I'm talking something that encompasses, for example, all-time high up until like some solid support. This seems to be a good one. 1.3 price range seems to be a good support level. Worst case scenario, if it drops from there, it probably can go down to this other support level here. Actually, this is one of the first support levels that we saw. Some consolidation happening here, right? The price was chopping sideways. From here on, it just shoot up. It met then this resistance at 175. And also let me add in really quick, I should probably already mention this, but when you're looking at candle charts here, the different time frames will serve different purposes. So let's say you want to provide liquidity for the long run, all right? So in that case, look at the chart with, for example, 4-hour candles or daily sometimes even weekly candles, depending on how long you want to go. If you're planning to go for one whole year, yeah, go with weekly candles because the chart will read differently. It will give you information fitting what you're looking for depending on the time frame, right? So if you're looking for long-term periods, 4 hours and above candle charts, if you're looking to provide liquidity for a couple months or even below that, 1 month, a couple weeks, go with 1 hour candle charts or below that. Okay, so Aster is a very recent token. We don't really have too much to work here in terms of information, but this is not random information. The charts tell us all the human interactions with the token. Even if there are bots, someone programmed those bots to buy and sell at specific prices. All right, so we are looking at the human behavior regarding to buying and selling this token, right? So there's some psychology to it. So now let's talk about setting ranges. When you set ranges, you need an upside range and a downside range. So what are you going to use to determine your upside? It's going to be resistance points, or it can be also a point where you determine yourself. Let's say you think Aster is a $5 token, then you might want to set up a $5 upside range, right? It's going to be a long shot from here, but you will earn fees in the meanwhile. So that would be, let's say we are at 1.9, so that would be a price appreciation of 162%. So you can definitely anticipate a price where you want to sell your whole bag, or you want to just keep on generating fees, and for that you will have a tighter range, and in that case just look at where the price resistance is. All-time high is naturally a resistance, but depending on how much risk you want to take, you might want to squeeze in your ranges more, and right now we are at $1.9 per token, and from here on the next resistance is at 2.10, and this would be a tighter range if you are wanting to yield farm with that. So notice that in the past we hit that price mark here, September the 26th, and once again in September the 27th. Once the price hits that spot to $2.10 per token, it immediately drops, and it drops down to a support level which back here was at around $175. So this seemed to be a support, but later on you see that the resistance actually dropped. From this point in time here, it was 2.1. Then after the second test, it dropped to 1.75, and the next resistance was no longer at 2.1, but it was below that. It was at 1.95, something like that. And once we lose that support level here, we are already on a downtrend. And when that downtrend happens, notice that previous support levels that was at around 175, this becomes resistance. And that's what happened here. So the price fell from this resistance point down to 156. Then it tested here at 170, which is very close to this previous support level, right? Once it breaks through that, notice that 171 was the resistance here. So this was October 1st, but then on October the 2nd, we see that this resistance actually broke through, and then it became support. So notice that the price went up to 1.82, and then it went down to 172. Pretty much this resistance became support because it bounced back up, once again testing at 185, going back down, and now it's slowly picking up from that. So essentially now we are in an uptrend because of that. Previous resistance became support. And the same is also true for the opposite. Whenever previous support becomes resistance, we are on a downtrend, right? So right now we see that it's once again testing at around 1.90 like it did here. If it manages to break through, we can go to the next level up, which would allow you to set a range, for example, at this higher resistance point, 2.1, and then maybe a downside range at around 1.8. But again, these are examples for narrow ranges. Like I said, optimally, if you want to yield farm something for the long term, which Aster I think it's a good option, you might want to go with much wider ranges. So for example, looking at the overall chart, you want to zoom out as much as possible, right? Depending on how long you plan to provide liquidity. But this seems to be a support level which is strong, 1.3. The last time the price was at this range was September the 22nd, and we see that from all-time high the price dipped, and then it bounced back up a little bit, it dipped, bounced a little bit back up. So notice how the pattern here was from all-time high. Lower lows, and actually it was holding down on the support levels, but they were slightly lower also from each time. Here the support was at around 180, here it was at around 170, and then the next one dropped further down to 152. But we never really got to test again this previous support at 1.3. So I would say for a wide range, 1.3, maybe even lower than that, like $1 per token. That would be a safe range to yield farm Aster. And then you can also set the all-time high as your upside range. But even then, even if you think this is a wide range, it's not, because this can be crushed in a matter of a month, 2 months, depending on how the market keeps going. On October, definitely it's crushable. So we're looking at overall 50% range, which is nothing. But still, it's going to be much safer than going with a 5% overall range, something like that. Unless you don't mind holding, if price drops and you keep your ranges open, waiting it to bounce back up. If you don't have any issues with that, it can also definitely be an option. And actually, Aster chart, since it's not that old of a token, we can take a full look at it right now, even with 15-minute candle chart, and just take a look at all around where our resistance points and also support. So for example, we had some resistance here as well, more resistance here at around this price point. This whole thing here is resistance. Closer to today, we have these peaks here, also resistance, and of course there's all-time high. This is also resistance, right? And now let's look at support levels. So there's one here. Actually, let's switch this up for green so we can make a difference with them. More support here. Here there's a big support, another here. This one here is also support. Here as well, here and here as well is support level. So there's more support and resistance to this depending on how we zoom in, but in the overall look at the chart, this allows us to see where are the points where resistance was hit and then what happened after. So this first resistance here was actually quite significant. This is actually the first real resistance that we saw, where after it there was a strong pullback. And because of that, notice that once we broke this resistance, which ended up happening here on September the 23rd, it actually led us to see the all-time high. So the most significant resistance point until this point in time was actually then the next support level that allowed us to see the token reaching all-time high. This means that whenever resistance becomes support, we are in a new phase, in a new level. So actually here we see that this was also a resistance point that we met once. The next time that we saw it reaching that price range was here, September the 23rd, and it didn't even test. It just broke through it. It set up a new resistance at 2.1, and from here on, it showed us that previous resistance here actually was now our current support, giving us reassurance that we were definitely in a new phase. So this is the moment where, let's say, if you had a range before that was according to this resistance, so let's say you had something like this, now you are going out of range, right? So okay, so this makes everything much clearer. Now this range would still allow you to generate fees, but if you want to work with a narrow range, actually you could readjust at this point in time, because you see that the previous resistance became support, so you can actually move this up to the current support, or if you want to be a bit more conservative and have a little bit more leeway, you can actually match this with previous resistance, lower resistance levels in the past, right, which showed some support here as well. And then on the upside, you can also set it to be with the current resistance at around 2.15, 2.10, something like that. So this will allow you to have a better performance yield farming within the current price range. Now, the opposite is also true. Whenever previous support becomes resistance, it shows us that we are entering a downtrend. But before that, notice that while we were here at all-time high, notice how all of this support here, these smaller support levels, so let me zoom in so we can see it better, but notice how all of this support is actually matching up previous resistance, right? So it's pretty much at around the same price level, and we're seeing that we have a confirmation because previous resistance now is support. Until we experience this drop of support where it didn't manage to hold. And what happens then? We see that this previous resistance is once again resistance. So the price goes down into another phase after all-time high, and this is once again within our chosen range. So this is actually something you could do if you were yield farming with the token that it reaches all-time high. You don't necessarily need to withdraw all of your liquidity and create a new support, although it can be profitable because it generates a lot of volume. It will happen often that if you wait it out, it will cool down and it will go back into your range. So you can just wait it out, and if that would be the case, you see that you would have not managed your position and it would actually kept on generating you fees. Once again, you would only be at around from September 24th up until the 25th, so roughly one whole day without generating fees, but then you are back into range, and we're looking at overall range of 20%. For how long? Actually, let me zoom out. So we entered this range once again for more than 5 days, a whole week of farming with this range. Let's also take a look at how once the price dropped back into this range, now our resistance becomes once again 2.11, 2.12, something around that. And looking at this previous phase here, the support was that. Now our resistance is what beforehand was the previous support level, and that is a clear sign that we are definitely right now in a different phase, so in a different range, potentially facing a downtrend, which happened to be the case here. It was actually the third time that this resistance was tested, and then it dropped almost to our very bottom range here. So let me zoom in here once again. So you see it's very noticeable, lower tops and lower lows. We are definitely on a downtrend. Once again, since we find this support point here and it does manage to hold, now we're seeing twice in a row testing this here. This price of 1.8 fall down, it went down to support, bounced back up to once again testing, fell down, bounced back up, and it managed to kept on going slightly up and up. There's a small rally here of overall, let's see, 10%, and do you see that these lower resistance points here are actually the support for this uptrend. So that shows us that we are currently entering a new phase, a new uptrend, because resistance points are becoming support. The more you zoom in, the more noticeable this will be, of course, because we are looking at a more narrow time frame, but essentially that's what has been happening. And just take a look at those things, support becoming resistance and vice versa, to identify if you are entering an uptrend or a downtrend, and readjust ranges accordingly. And notice here, once we lost this support, now the new support is down at 1.5, and previous support levels that we could see here at around 1.7 are actually the new resistance. If you want to readjust ranges, look at previous resistance, previous support levels, and just go from there. Essentially, when we are setting ranges, we are just basically looking at past information and try to understand how that can help us to just set up ranges for the future. Because people who buy and sell, they are also taking profits at these resistance points, and they are also buying in when the price drops to support levels. And the more people do this and follow these rules, the more true it becomes. But essentially that's it, guys. Support, resistance, consolidation areas, those are the things you want to look at as a yield farmer and identifying the chart. So guys, I hope the video was helpful. If you have any question, let me know in the comments. If you are completely new to this and you want to know more, go check out my video. I will link down, and also at the end of this one, Liquidity Pools 101 on PancakeSwap. It gives you a full understanding of everything that you're looking on screen. Merge that information with the one I just showed you here, and you are going to be on your way to generate passive income by using liquidity pools, using crypto. If you want to know more about it, be part of a group, a community of like-minded people doing just the same thing. I do not have a group, but I am affiliated with the Underdog investor group. If you use my referral link down below, it will get you 20% off on your first month. That being said, guys, thank you for watching. I'm going to wrap this one up. Take care, keep exploring crypto. I'll see you on the next one.